Welcome back to Yahoo Finance Live, everyone. Earnings season may be getting into full gear and full swing here, but we've seen some dramatic moves across asset classes this week. Yahoo Finance's Jared Blikre always keeping a close eye on the action at the Wi-Fi Interactive. Jared?
Yes, as you noted a few minutes ago, Brad, everything down right now, but only slightly. The NASDAQ is a worse off, down only 0.4%. I want to take a deeper dive into the market. This is the S&P 500 on a 3-month basis, and we have come right back down. You can't see this very well because we've had very little price action today, but about halfway down between these gains here. And this is kind of a critical moment for the stocks. I don't know if we're going to have this today, but in this decision area, got to make a decision whether they're going to go up or down. Now, this is Friday. And last Friday, well, we were down. The Friday before that, we were down. In fact, if you go to August, mid-August, right here, we have been down 8 of the last 9 Fridays. Could be 9 for 10 today. Plus, we have OpX. Now, options expiration, which occurred on the open for indices, occurs later today after the close for individual stocks. That also has bearish seasonality. And this is something I'm looking at. I'm going to be tweeting about this, some interesting charts later today. I have a chance to go over some of them in studio as well. But let's get to the main market here. Regardless of whatever happens in the close, let's analyze what's going on now. We have industrials, consumer discretionary, materials, and energy and financials, all of those outperforming. And a lot of this has to do with the bond market. I'm going to go back and we're going to take a look at some of these bond market indicators here. Here's a 5-year T-note yield. That is down 2 basis points, but we're seeing the 10-year. That is screaming higher once again. Here's a 3-month chart. You can see this is the highest, in fact, since about 2008, 2009. 13-week T-bill taking a little bit of a breather, but still up near these highs. And the U.S. dollar has been the big problem for a lot of global indices, and I'm going to be talking about this with Kiko at 11 a.m., but real short here. We've had an effects intervention loop that has gone awry. You have central banks like the Bank of Japan. They have been selling their dollars into the market, trying to raise cash, trying to support the yen. They only have so many dollars. What happens after that? They have to sell treasuries. China might be doing the same thing. It's a vicious feedback loop that we haven't seen really the effects in this country since about 1994, Mexican currency crisis. So a lot more on this throughout the day, but just wanted to leave you with that. We got some various undertones in the currency markets that are really wagging equities right now, guys.
Yeah, and really good dollar analysis too by our very own Julie Hyman in today's Morning Brief newsletter. I encourage everyone to check it out. Jared Blikre, thanks so much.